Okay, so you've probably seen the headlines, right? T-Mobile's Q2 results being called fantastic.
Yeah, their CEO even said it was their greatest Q2 for growth ever in their storied history. Pretty bold stuff.
Exactly. But what does that really mean? Especially for a company this big and, for you listening, trying to follow the telecom industry.
Well, it's quite a claim, and that's our mission today, isn't it?
Wow.
To really dig into the details.
Right.
We're pulling insights straight from their Q2 2025 earnings call transcript and their detailed 10Q filing. This is all fresh, just out.
Super fresh.
And it really paints a fascinating picture. So we're going to unpack, the big achievements, the strategic moves they're making, and what it all might signal for where they're headed.
Okay, let's start with that quarter for the record books claim. T-Mobile's leadership, they weren't shy. Fantastic results, leading the industry, smashed their own records. Where do the numbers actually back that up most clearly?
They certainly do seem to back it up. I mean, when you dig into the customer growth, it really was their best Q2 ever for postpaid phone net ads
Okay.
and total postpaid net ads and gross additions, too. What's really striking is that these were all up double digits compared to last year.
And last year was already strong, wasn't it?
Exactly. That was a very strong 2024 comparison. So this suggests, real sustained momentum, not just beating weak numbers.
And it wasn't just about individual phone lines, right? That's usually the headline grabber. But what else was growing on the customer front?
Good point. Their postpaid account nets also picked up speed year over year. That's key because it shows they're bringing in whole households, not just single users.
Right. Sticky customers.
And significantly, their share of households grew in like every single cohort within the top 100 markets,
Wow.
and also in smaller markets in rural areas. So it's this really broad expansion across different types of places and people.
That definitely paints a picture of them pushing hard into new territory. So, okay, add it all up. What was the total customer gain for the quarter?
For Q2 25, total net customer additions hit 1.8 million.
1.8 million.
Yep. And that's up by about 254,000 compared to Q2 last year. It pushed their total customer connections to a new high, 132.8 million. It really shows their acquisition engine is firing.
Okay, so customers are definitely coming in the door, but the big question for any company is profitability. Was this just growth at any cost, or did the financials look good too?
It was definitely profitable growth, which is crucial, right? Average revenue per account, ARPA, that grew over 5%.
Over 5%. That sounds pretty good.
It is. It's actually T-Mobile's highest ARPA growth in 8 years. So it's not just adding lines, it's getting customers, new and existing, to choose more premium, higher value plans.
And that connects to something interesting they mentioned. Customers are self-selecting up the rate card. Their new Experience Beyond plan. It's being picked up way faster than their old premium tier.
Yeah, more than double the rate of the previous Go 5G Next plan from a year ago. And it's up over 50% just in the last quarter alone.
So what does that tell us? Customers are seeing value there.
It's a strong signal, yeah. It tells us people are seeing the value in those higher tiers. Maybe it's perks, features, maybe better service perception. And this willingness to pay more, it directly fueled their postpaid service revenues.
Okay.
Those grew 9% year over year, which is actually faster than Q1. And total service revenues grew 6%. They made a point of saying that's well over double that of their closest competitors. So it's not just growth. It's leading the market in service revenue growth.
Impressive. And how did that translate down to the bottom line? Profits, cash flow?
Well, core adjusted EBITDA grew a solid 6% year over year.
Yeah.
And maybe even more telling for their long-term health, adjusted free cash flow hit a new Q2 record, $4.6 billion.
4.6 billion.
Right. And that translates to what they call an industry-leading conversion rate from service revenues, 26%. Basically, they're really good at turning revenue into actual cash.
Which they need for investments and shareholder returns, right?
And absolutely. And net income. That was $3.2222 billion for the quarter, up over 10% from last year. Diluted earnings per share, EPS, jumped 14.1% to $2.84.
Those are really solid numbers across the board. Okay, so let's move beyond just the financials and explore this growth engine a bit more. What's really driving this? You mentioned the business sector earlier.
Oh, absolutely. T-Mobile for Business, their B2B group, it keeps breaking its own growth records. They're consistently leading the industry in business net ads. That shows they're really making inroads with companies, both big and small, which historically was maybe a tougher area for them.
And broadband, they're really pushing hard there, aren't they? It's clearly not just about phones anymore.
No, it's a massive focus now. They finished Q2 with 7.3 million 5G broadband customers.
7.3 million already.
Yeah, they added 454,000 just in Q2. That's up 48,000 from last year's Q2 ad. They've been the leader in broadband share gains for 14 quarters straight.
14 quarters, wow.
It's an incredible run. And it means they're now officially the 5th largest internet service provider, ISP, in the whole country.
Huh.
That's a huge shift in their market position.
That is huge. But here's something that really caught my eye about their future potential. They noted that while lots of new customers switch because of the network, only about 20% of all switchers out there think T-Mobile has the best network.
Right.
They see that as an enormous runway. What's the significance of that perception gap?
It means there's this huge pool of potential customers still out there for them. Despite their actual network strength and all the customers they're winning, there's this lingering perception in the wider market that maybe they aren't quite number one.
So if they can just get the message out.
Exactly. If they can close that gap, get their story to every person in America, as they put it, there's potentially massive growth still ahead. It's about perception catching up to the reality they're building.
And they are building it, right, with new sites and tech.
Oh, yeah. They've lit up 1,000 new greenfield sites just this year so far. The plan is nearly 4,000 total for the year. Plus, they were the first with things like nationwide 5G advanced, automated network slicing, higher order carrier aggregation, all that tech stuff.
And this tech isn't just theoretical, is it? They mentioned some big names, choosing them specifically for things like 5G advanced and slicing, Miami Police, LA County Fire.
Yeah, the city of El Paso, too.
Yeah.
That's powerful validation. When critical public safety and big organizations choose your network, it says a lot about its performance and reliability.
Definitely.
And speaking of new services, they're also rolling out T-Satellite. Just $10 a month. They say it's truly differentiated.
And they gave some real-world examples, didn't they? Not just connecting hikers, but like first responders, bus drivers in dead zones, oil and gas operations.
Right, places untouched by any carrier. They even mentioned it was important during the recent floods down in Texas. So it shows practical, critical value.
That's compelling. Okay, so lots of additions, strong network story, but what about keeping customers? Any movement on churn?
Yeah, that's worth noting. Postpaid phone churn did tick up slightly to 0.90% from 0.80% a year ago.
Okay.
They attributed that to the temporary impact of current year rate plan optimizations. Basically, price changes causing a bit more switching.
Huh.
And prepaid churn also increased a little to 2.65% from 2.54%, which they put down to normalized switching activity. So slight increases, something to watch, but they have explanations for them.
Right. Always something to keep an eye on in this market. Okay, let's switch gears now to strategic plays. Partnerships, acquisitions, future stuff. They just announced a new deal with a cable provider. What's that about?
Yeah, this is a multi-year partnership aimed specifically at small and mid-market businesses, SMBs. T-Mobile is calling it a true win-win.
How so?
Well, it helps them get mobile services into that mid-market segment where they admit they haven't had much exposure. It complements their focus on the really small businesses and the giant enterprises. So it's about growing their addressable market via partnership.
Makes sense. And they're also making these big moves in fiber, right? Through joint ventures. This feels like a major part of their broadband plan beyond just the 5G fixed wireless.
It absolutely is, yeah. Their T-Fiber service officially launched last month, June 25.
Okay.
It's live in Lumos markets and wholesale areas, and they say it's going great. They closed the joint acquisition of Lumos with EQT back on April 1st. That involves investing about $932 million and picking up 97,000 fiber customers right away in Q2.
And more investment plan there.
Yep, another $500 million planned between 2027 and 2028.
And there's another big fiber deal closing literally any day now, right?
That's right. The joint acquisition of Metronet with KKR, that's expected to close July 24th. So probably closed by the time you hear this.
Yeah.
All the regulatory approvals came.
And that's a bigger investment.
Much bigger. T-Mobile expects to put in about $4.6 billion at closing and will take over Metronet's residential fiber customers. They sound hugely excited about broadband overall. They see it as this mix. Fixed wireless using their spare network capacity, and then these strategic fiber investments where the numbers make sense.
Gotcha. So what kind of fiber growth are they expecting this year from these JVs?
They're projecting adding 100,000 FiberNet customers this year, but mostly loaded towards the second half, obviously, as these deals close and integrate.
Okay. And beyond fiber, they've also been trimming their spectrum portfolio, selling off some assets, What's the thinking there?
Right, these are pretty significant deals, nearly $5 billion combined. It's not just about raising cash, though. It looks like strategic optimization.
Okay.
They sold some 3.45 gigahertz spectrum for $2 billion.
Uh-huh.
And then there's the deal with grain management. T-Mobile divests all its 800 megahertz licenses for $2.9 billion cash. Plus, they get all of Grain's 600 megahertz licenses in return and potentially more upside later.
So swapping lower frequency for mid-band.
Well, selling 800 megahertz, getting 600 megahertz back. It seems like shedding bands that are maybe less critical for their main 5G build-out to focus resources.
Mhm.
That grain deal should close late this year or early next, and they expect about $850 million in taxes from it.
Lots of moving parts. And then there are the major business acquisitions beyond the fiber JVs. U.S. Cellular is the big one.
Huge one. Acquiring almost all of U.S. Cellular's wireless operations and some spectrum. That's about $4.4 billion, some cash, some assumed debt. That's expected to close August 1st, very soon. Approvals are in.
And that comes with tower leases, too.
Yeah, they'll lease space on at least 2,100 U.S. Cellular towers and extend leases on current ones. At the same time, they're buying wireless assets from the Iowa entities for about $170 million, also closing August 1st. These are clearly moves to grab market share and expand their footprint.
And didn't they already complete a couple of smaller, more tech-focused acquisitions earlier this year?
They did. Back in February, they bought Vistar for $621 million cash. That's for digital out-of-home advertising tech. And in March, they bought Blis for $180 million cash, focused on location-based advertising. So it suggests they're looking at ways to maybe leverage their customer data and reach for new adjacent revenue streams beyond core connectivity.
That is a lot of activity partnerships, fiber, spectrum deals, multiple big and small acquisitions. How are they managing all this integration? Are their internal systems keeping up?
They say they're more than on track with their digital transformation. That includes using AI for sales and service. And a big piece is they started rolling out a new global ERP system in Q2.
ERP, that's the backbone stuff, right? Finance operations.
Exactly. It's a huge multi-year project to replace a lot of older systems. Sounds complex, but they seem confident it's progressing well.
Okay, finally, let's look at shareholder value and long-term vision. With all this spending on growth and acquisitions, how are they treating shareholders? And what's the big picture strategy here?
They have a very significant shareholder return program. For 2025, it's authorized up to $14 billion through year-end. That's a mix of share buybacks and dividends.
And they've been active with that.
Very. In the first half of 2025, they paid out $2 billion in dividends and bought back $4.9 billion worth of shares. That's over 20 million shares. As of mid-July, there was still about $6.6 billion left in that authorization for the rest of the year. So a clear commitment there.
And what's the philosophy driving all this? You mentioned their strategy is differentiated. What does that mean in practice? It doesn't sound like just getting bigger for the sake of it.
Precisely. They keep hammering that point.
Mm-hmm.
The strategy is differentiated, it's durable, and has tons of room to run. They see these pockets of outsized growth, smaller markets, business customers, broadband.
Right, the underpenetrated areas.
But crucially, they stress they're also still winning over those demanding network seekers in the big established markets. The CEO explicitly said they aren't chasing scale for scale's sake. It's about delivering a fantastic return for shareholders.
So focus on profitability.
Yeah, their core idea seems to be mobile is the considered sale. People think carefully about choosing their mobile provider. And T-Mobile's plan is to add other products to that mobile relationship products that make sense for customers and, importantly, that they can make money on. It's a very focused, profitable growth approach.
So wrapping this up, we've just taken a deep dive into T-Mobile's Q2 2025. It really was a quarter packed with record growth, both customers and financials, really aggressive network moves, and a whole flurry of strategic deals, partnerships, acquisitions, all while keeping a sharp eye on shareholder returns. It's clear they're firing on multiple cylinders.
Yeah, their ability to grow the core wireless business while simultaneously pushing hard into new areas like broadband and fiber and doing all these complex strategic deals, it definitely stands out.
Which brings us to a final thought for you, our listener. Considering T-Mobile's intense focus on both widening its network lead and aggressively expanding into broadband, fixed wireless, and fiber, now how might the very definition of a wireless carrier keep changing in the next few years? What does that mean for competition? And ultimately, what does it mean for you, the consumer? Something to think about.